Due to the confluence of all of the events that lead us to where we are today, I believe the slowdown in the global economy is inevitable. Ravi Menon actually dropped a video talking about the good, the bad and the ugly situations that may happen in the economy. Let's go and watch it. At the end of this, I will come back and then I'll talk a little bit about the ugly.
It is difficult to forecast the extent of the growth slowdown next year, given the complex interplay of multiple factors. It may be more instructive to think of possible scenarios. A good scenario would be what policymakers and analysts call a soft landing, where growth slows down sufficiently to reduce inflation, but the economy avoids recession. But given how high inflation has climbed and the degree of monetary policy tightening that may be necessary to bring inflation down, the pathway to achieve such a scenario is quite narrow. A more likely variant of a good scenario is a mild, short-lived technical recession that tames inflation and sets the stage for a sustained recovery in growth. A bad scenario is a deeper recession in some of the major economies, even as inflation is brought down, a so-called hard landing. Such a scenario could occur if monetary policy tightening precipitates sharp dislocations in financial markets. In many countries, financial vulnerabilities have increased due to a run-up in private sector debt during the last 10 years of highly accommodative monetary policies. Overvalued assets and high debt could magnify any growth slowdown. An ugly scenario would be one where growth stagnates while inflation remains high, stagflation. This could happen if fresh supply shocks or disruptions further boost inflation, while monetary policy tightening sharply reduces economic activity. Stagflations are rare, but when they occur, they present particularly difficult policy dilemmas for governments and central banks. In Singapore, economic growth is expected to moderate further in 2023 in tandem with the slowdown in our major trading partners. The extent of the growth moderation will depend in part on how the scenarios for the global economy will pan out. As of now, we expect neither a recession nor a stagflation in Singapore next year. But there are considerable downside risks in the global economy which will affect us and which will bear close watching.
Thank you, Mr. Menon. So now let's talk about stagflation. What is stagflation? Stagflation is the stagnation of growth, means our GDP doesn't increase. High inflation, I'm sure we know what that is, and high unemployment. Okay, so for us common folk, what this means is that it is going to be a slow bleed to death. Okay, so the cost of living is going to increase, but our wages is not going to increase because GDP is not growing and the company's profits are not increasing. Due to the confluence of all of the events that lead us to where we are today, I believe the slowdown in the global economy is inevitable. We are seeing signs that inflation may have topped out because commodity prices are falling. However, today a report came out from the MAS and MTI saying inflationary pressures will remain elevated in the months ahead. MAS core inflation is projected to peak in Q3 before easing towards the end of the year. The only thing that central banks are able to do is to tighten monetary policy for something so short term. If they increase the interest rate too fast, they might displace companies or even countries, and because of that we might see unemployment going up. And if unemployment comes in before inflation drops, what happens is we have stagflation. I just want to say that Singapore is a very small country with a very open economy, but we have amazing government. So we love you, MAS. Thank you for taking care of us. #Majulah.